What's up, you guys? My name's Henry. If you're new, this is the second video in the series of options trading because that's my area of expertise when I was working at Goldman Sachs. And in this video, I'm going to explain to you covered call options. I'll also show you a live trade that I'll be making in Robinhood on selling call options on Tesla stock. Here are the benefits of selling call options and why this little known strategy can make you tons of money if you do it properly. Number one, selling call options can generate income in which you get paid the option premium up front, yes, right now, for holding stock you already own anyways. Number two, call option sellers benefit as time passes and the option decays in value. In this way, the seller basically makes money every single day as the option is open and you've sold it, and every single day that it decays, you're earning more money because if you were to buy it back, you would have a gain on your hands. Three, selling call options is a fantastic exit strategy. I sell calls not only to generate income, but get out of stocks at a much higher predetermined price by using call options. Before I jump in and flood your pockets with money, make sure you like the smash button for Uncle Henry and subscribe because I'm about to make you stupid rich. Okay, let's talk about how to make extra income on stocks that you already have by selling call options. First of all, selling calls is a very different strategy from buying call options. Buying call options, you just need some capital, and there you go, you buy a contract on a stock that you're bullish on and wait for it to go up, and you participate with the gains of the stock going up as, you know, the option goes up with it. First of all, selling call options is very different from buying calls. So buying calls, you just need some capital and bada bing, bada boom, you buy some contracts, and as the stock goes up, you're bullish on that stock. Stock goes up, the option goes up. It's pretty simple, and I showed that in this video. Now for selling calls, there is something you have to be aware of, which is you need to be covered. Covered means that you have 100 shares behind your short call option. So selling calls caps your gains because once you sell a call at a certain strike price, you can no longer make money above that strike price plus the premium that you collect. However, you do get paid right away when you sell a call option, and that is a fantastic thing because there's something called time value of money, and money today is better than money tomorrow. Here's an image of what a covered call looks like. As you can see, your profit potential is cut off at a certain point. Let's say that you have stock X at $100 per share. You decide to sell a 110 call that's worth $5. What that means is when a stock rises past $110, it's now capped and the buyer will exercise on or before the expiration date. But your break-even price is actually higher. What is it, guys? What is your break-even price on this trade? If you say $115, you are right because the break-even price is a 110 strike plus the $5 worth of premium, which is $115. So what happens beyond $115? Do you lose? No, you just can't earn any more money, and the upside is now owned by the call buyer. Guys, if you bought a stock at $100 though, and in a month you have to sell, and I mean you get exercised at $110 plus 5, which means 115, is that really an issue? I'd say not really, because that represents a 15% gain in just 1 month in this example, and that's pretty huge for having a 1 month return on a stock that you already like to earn. And that's pretty huge on a stock that you already like to own. Now, if a stock ends below $110 and you get to keep your premium and the option expires worthless, meaning you get to do it all over again because essentially the option is taken out of your account at expiration if it did not reach the strike price, meaning you've made money and you can do this strategy over and over again to generate more income. You don't have the short call anymore, so you can go ahead and sell more calls or just go back to being a stock investor. Either way, selling calls is just a tool that gives you premium, and if a stock falls, it gives you a little cushion. That's what I like about calls, since the premium you collect also acts as a hedge or margin of safety, as Warren Buffett says. So before I discuss the exit strategy, let me show you a real life example in Robinhood. All right, so for you guys, I'm going to do a real life call example. I'm going to be selling a covered call
one call option on Tesla stock. So if you're a subscriber to my channel or you've been watching my videos, you know how much I love Tesla, and this stock has been absolutely exploding higher. And basically, I'm going to show you a covered call example. So I'm looking at the option chain. This is called an option chain. I'm going to look at October 23rd, and actually they have earnings this week on Wednesday. So I don't want to sell a call option that is near the money. I want to sell an option that is very far out of the money. So I'm going to click sell call, and essentially what I'm going to be doing here is going back to the exit strategy that I was talking about. When you sell a call option, once it hits your strike price, that call option is going to be called away from you. The stock is going to be called away from you. 100 shares of that stock, in fact, are going to be called away. So I don't want to sell something near the money because I don't want to exit Tesla at 435. Just in case Tesla runs up, I want to make sure that I'm going to be selling at a much higher price. So I'm going to scroll up, and I want it to be at least 90% in my favor. So here we go. This strike price of $500 is way out of the money. It's very far away from the current price of $432. In fact, it is, what is that? That is $70 away, or for 100 shares, that's going to be 70 times 100, or about $7,000. So I want to earn at least $7,000 this week. And if I don't earn that, that's totally okay, but I'm not ready to sell Tesla until it reaches 500. That's what I'm saying here. So I'm going to click 345 or 343. I'm going to click continue. And guys, I have the stock. I have a bunch of shares of the stock. I have a whole lot of shares. So for me, selling one call option, it's being covered by the shares that I hold. So what I do here is I click one, and here we go, 3.45. And I'm putting 3.45, and that didn't go through. Or did it? There we go. 345, I'm putting it because here is the bid and here's the ask. 3.45 is the lower end, it's the bid. 3.5 is the ask. So I'm going for the bid. And me talking so much, I just lost $5. 3.4. And I want to get executed here because there's only 7 more minutes until the market closes. So I'm just going to place this trade in real fast. Review, and Robinhood is being slow on me. Come on, Robinhood. Try to make a video for the subscribers. Essentially, while they load, I'll just explain a little bit more. At $500, you have to sell the stock, but you're collecting $3.45. So your break even is $503.45. That is the point at which I will no longer make any more money beyond this level. However, up to this level, I'm going to be collecting money of $343 and making money on the stock as it rises. Here we go. Yep, that is totally okay. They're just saying you're agreeing to sell 100 shares of Tesla at 500. See, I told you guys, it's 100 shares. You know that, though. You know that. I'm not going to play here. Okay, submit. Let's go. Okay, guys, that took a whole 3 minutes because Robinhood was like glitching or whatever, but we actually got filled for $342. What happens there is you collect $342 right there on the spot. And I opened this up because I was waiting for a whole lot of time. I was like, any second now, I'm going to go over this. When am I going to get filled? Finally got filled. Anyways, the volatility is very high on Tesla specifically because they have earnings this week. And options are priced based on volatility, which is how much a stock moves up and down, as well as how much time is left. And now this stock is, this option is trading fairly expensive. That's a lot of money to be made for an option that is so out of the money. It's 90% chance not likely to reach this point, but there's still a lot of premium because of earnings. So earnings, during the week of earnings, stocks have a whole lot of volatility because a lot of surprises may happen and investors know that. So for Tesla, I sold a call option that is very far out of the money because I want to be safe and I do not want to be executed, but I want to collect some premium. So I hope this example was helpful for you. Now let's finish the video.
So here's the takeaways for what I did during the screen share. I'm comfortable giving up Tesla at $500 per share. Selling a call option generates $342, and I sold a call option expiring October 23rd. It would work the same for any stock and any week though, as long as options are available. From the current price, I think it was $433 up to $500, I would benefit as a regular stockholder, except I get an extra $342 and I am better off in all situation up to the break-even price, which was the $500 strike plus $3.42 premium, or $503.42, I'm going to be profiting just like a regular stock investor all the way up to that break-even price. So basically, someone else wants to gamble Tesla will skyrocket past that break-even, and I'm here collecting money, getting paid. Getting paid with consistent income, in my opinion, is way more important than just holding stock outright, because cash flow allows you to retire or live the life that you actually want to live, and it actually gives you a more sense of what you're earning and what you're risking. Whereas with stocks, you're just holding and you're hoping that they go up, but with call options, you're actually generating income and you know exactly how much you generate. In this example, is $342. If you want more information, I have a website that will be finished very soon. The link is in my description, or you can just put in your email and I'll notify you as soon as it's up. It's gonna be up any day now. Let me know if you guys have any questions. Remember, don't place any trades because someone on the internet did. I'm not a licensed advisor, but I will 100% educate you guys so you can make your own educated decisions in the stock market and with the options to make consistent income, make your life better, and just be an overall better investor. Thank you so much for watching. And you know what you have to do for me, right? Be aggressive in learning, but be safe in investing. I'll see you in a video very soon.